Hi, this is Kevin Steuer from the StockTA podcast. I'm here with Shad Marquitz from the KE Report. Shad, how are you?
Great, Kevin. Looking forward to doing another segment here with you.
Yeah, so just quick disclaimer. We're recording this on Thursday, February 26th, about 6 p.m. Eastern time. There's some political implications of what's going on in the Middle East and with Iran. So by the time we edit this and get this live, things could change drastically. So we just want to let people know that what we're talking about, the charts might change a little bit in a couple days. And just a reminder, this is not investing advice. This is for educational and entertainment purposes only. And we're going to change it up this week. And we're actually going to start with platinum first. So the platinum chart's really interesting. We have a neutral trend overall, neutral trend short term. Had a really big run the end of Q4 to end 2025 and has pulled back. And what's kind of interesting is we have a confluence of 28 here, which is heavy support at 183.39. It closed at 207. So it's not quite down there yet, but there's not any heavy resistance above it. So this is kind of an interesting setup, kind of a contrarian play when everybody's talking about gold and silver. We're talking before we recorded about the different metals, and this is just one that kind of caught both our eyes, and we want to talk about it. So, Shad, what thoughts do you have on platinum here?
Well, platinum has been wild, Kevin. I mean, if you look at what happened at the end of last year, from November to December, that was a wild run. And then the beginning of this year, it kept blasting higher, and it was really a sympathetic trade with silver. So you saw palladium, platinum, and silver rifling higher along with the precious. Well, they are precious metals, but they're more industrial metals now. But they were trading like silver, and then the margin requirements were raised on silver as well as on platinum, and they really hit platinum hard. It was like 25% or something like that increases in the margin requirements, and you see that swan dive down on that big red candle where it just gaps down.
Yep.
So yeah, right there. And so that was wild. And so then people thought, maybe it's going to crash all the way back to where it had been earlier in the year, but instead it based sideways, and now it's blasting back higher, and it's getting close to those moving averages. So you see all those moving averages compressing there. If it blasts up through it, maybe it's a contrarian upside play. It could also get deflected right there. So it's definitely a chart to keep your eye on.
Yeah, this is one that caught my eye, and then the other one was copper. So this is the COPEX chart. This is still bullish overall and short term. And what I found interesting here is, again, confluence of 16 is heavy support at 90.17, closed at 95.06. So, it's pretty close to major support, and it has no even medium or heavy overhead resistance. So I could see this testing, the 100, over 100 again in the short term. Like, this has been an unbelievably strong, chart and metal in the past, I don't know, 3 months, 6 months. Like, copper's had a heck of a run here. And I remember people talking about, $3 copper, $4 copper. Now we're thinking like potentially a lot bigger copper. So, Shad, I was curious to hear your thoughts on it.
Well, and I've got some slides here I'll show too on copper, so we can maybe switch the share screens here.
Yep.
But when I look at what's happening with COPX, I think it's interesting to note the run that it's had. If you can see that on your end, just let me know.
Yep, I can see it.
Okay. And so what's really interesting is that COPEX went from 29.90 all the way up to 99.99, which I think is a wild place to top out. But that was happening when the copper price was really volatile, going up and down. Remember, we had the crazy stuff with the Trump tariffs where copper ran in front of it and then it dropped behind it. And these copper stocks have just kept trucking higher. And here's why. The copper producers, they're making a lot of money at $4, $5, $6 copper, and copper got up to $6. It was a sympathetic move with silver, but you can see here how high it actually got. It actually got up to $6.58 on the high on the futures. But if you look, this is a weekly chart just for orientation. It dove down as low as 556 here. We had come out of the period where we were in the fours. So going from the fours to the fives to the sixes is a nice run in copper. But if we back this chart up, here's how messy it gets. This is what was going on that whole year while copper stocks were going up. So you would think there's that swan dive down on the tariffs. You would think that during this mess that the copper stocks would be confused or maybe would have sold off in sympathy. But then if we go again back to COPEX, it's just a steady train higher, respecting the 50-day exponential moving average and the 50-week exponential moving average. In this case, it's the daily, but it's really respecting the moving averages. To me, that's a very orderly looking chart. So compared to copper, which looks like banana world here, it still has averaged, if you look at the general trend, if you were to squint your eyes from really far away, it's up and to the right. It just looks really messy. So I'm impressed with copper. I'm impressed with copper stocks. And I want to point out on these weekly charts, if you look here, this is the highest weekly candle we've had ever. So we actually this week are making a new weekly high as long as we hold that tomorrow, which we don't know what tomorrow holds on Friday. Some of these Fridays have been pretty wild. So, but I want to tie that theme in. If we look at gold, I'm going to jump to gold real quick. A lot of people are worried about the consolidation in gold. And again, this was that wild move up. I was at the Vancouver Resource Investor Conference when it got up to, you can see here, 56.26. And then it dove down the very next week to 44.23. It was a $1,200 spread between the high to the low. So a lot of people thought, uh-oh, it's over. But look what the weekly chart shows. It's different than the daily. If you look at the daily, I'll show you the daily. The daily got really messy right here, so people thought, oh boy. But when you put things in a different time horizon, if you go to the weekly and you dial this in, we are making the highest weekly close that gold has ever made, ever in human history this week. So as we record this,
And nobody's talking
making,
about it.
nobody's talking about the high. I have one friend, my buddy Goldfinger, Robert Sin, that has mentioned this, but I haven't seen any press talking about the highest weekly close of all time in gold. It doesn't feel like it. It feels like we're treading water. So what do you think about that? That we're making on copper and on gold?
I think it speaks to what's going on geopolitically, but on our internal stuff on spot futures for gold, we have the trend line at 48.95. So it's like it's way above that. Like I'm not worried about a trend breakdown. Like that would be a long move down, and even that that big red candle you show right there, that barely flipped the trend line to bearish, and it lasted for a day, and then it blasted right back through it.
Well, and these are weekly candles, just to remind people, these aren't daily. So look at how many weeks that we've been in the green compared to red. There's only been a few red candles. Everything else has been mostly green ever since back in November. Remember, we topped out in October and kind of rolled over here into November.
Yep.
So like during this little period here. But then as we kept trucking higher, it's been almost all green weekly candles. And again, this is a historic moment where we're at right now as we record this. Now, silver is a slightly different picture, and that silver, it had maybe it's the most volatile. It's more volatile than the platinum, than the copper or the gold. So on this weekly high, it got up to 121.78 on the futures, and then it dove down the very next week to 63.90. So think about that.
Wow.
For basically from 121 to 64, what a drop. It's not making a new weekly high, but it did rebound here. It's like basically through February, it bottomed. This candle in the middle, just for the technical people, is a doji candle right here. See how it's like a spinning top, as they call it? And this little red one where the body is so tiny because it was a tug of war between bears and bulls. And it looks like so far the bulls got the bounce out of here. Whether this rolls back over and goes lower or keeps going higher like gold and copper remains to be seen.
Silver is the one that worries me the most, if I'm being honest. That went
Yeah.
bearish for us like early February. And from February 2nd until just recently, until the 20th, it was bearish trend for silver futures. And it got rejected every time at that line until February 20th. And it's holding on for dear life. Like we have the trend at 86.04. So, I mean, that's one I'm really keeping an eye on because, like you said, it's the most volatile. And just in our system, the way we track it, when spot silver loses its trend, the silver miners get crushed like that day, the next day. Like those are you're down 8-10%. And I own a lot of silver miners. So that's one I've been like watching very closely.
I own a lot of, in full disclosure, I have 19 silver stocks. So I'm watching it very closely too. And you're right. If silver gets pressured, these things get hit. What's interesting though, is during this fall from grace here, when you see the big move down in silver, the silver stocks didn't correct nearly as bad. They didn't correct on the same percentage, and they didn't outperform silver to the way down. So, but this little rally recently, again, if we take it in context of copper putting in this really high weekly and gold putting in this high weekly, I'm curious to see what happens to good old silver here. But let's look at the ETFs here. Here's SIL. Again, you saw it drop on that fall, went from 119 down to 91. It hit the 50-day exponential moving average, bounced off it, came down and tested it a second time. and bounced again. And so it's actually back up 116 versus 119, the high. SIL is not that far off of its high, respecting the moving average, and it didn't collapse like the silver price did. What does your system say about SIL?
It's still bullish, both short term and overall. It's just the chart's really stretched. There's not much for medium or heavy support until the 91.12 area, but there's not much for overhead resistance. So this is a really interesting chart because it literally could go both ways, and if it could, and like with a large margin of error either way, not error,
Well,
but
and
like a move either way, up or down. And that can be great if you're on the right side of it, but also can be terrifying if you own, what'd you say, 19 silver miners?
yes. Well, and that's developers, explorers, and producers, but most of those are producers. I would say that 12 of them are producers, and then I have some developers and explorers mixed in there too. So if you look at it, we could double top as the risk, like somewhere close. If we get up another $2 or $3, that 119.24 was the
Yep.
prior peak. That's the concern, is that we double top and then boom, we roll over for a long time, or we blast through that level and blow everybody's mind, and then everybody's stuck chasing, which would be hilarious. But that's the way silver acts. So it's going to be interesting to see. But the fact that it held support at 91.31 and 93.96 here at this EMA, I thought was at least encouraging that it tested for support and didn't get rejected. And I use moving averages as my support. So just a thought. What do you think?
I agree, and the thing that really surprised me was it Monday of this week when we had the tariff uncertainty and the Dow was down like 800 points, and I had a couple meetings and I didn't log into my trading account right away, and I think I logged on around lunchtime, and I threw CNBC on and I saw how much the market was down. I'm like, the silver miners are going to be crushed today, like silver, gold, copper. Like I was just expecting a bloodbath in my account.
And they were okay.
I was up. I was shocked. I was like, I made a good chunk of money on Monday. And I'm like, the fact that they're holding up this well, considering that news, I thought was a really good sign. Now, I think the Iran potential news could be a totally different ball game. But I think the fact that all those miners held up so well with that economic uncertainty, I thought was a really good sign for things continuing to move higher.
And we should point out, we're talking charts, but temporarily, a crazy fundamental news release from a company and or a geopolitical event and or a Trump tweet that's, on a tariff, like what happened to copper, those can disrupt a market. But then eventually folks have to remember that that becomes pricing history at that point, and the chart then factors it in. So whether it's a global pandemic or the Ukraine invasion by Russia, all those things are now on the chart and you can look at them. So even if the Iran situation happens between when this airs and when we're talking now, it'll eventually be part of price history. But it's just, with silver, interesting to watch where these mining stocks are. Let's check in on GDX. It is literally at a point where it could double top or break out. If you look at this, it's very interesting. GDX, the prior peak, 113.50. Right now, 113.89. Let me just make sure I'm not adjusting for dividends. This is one of the things with stock charts, just to make sure that's not different. No, it's still held. So sometimes that'll move the price. So 113.50 versus 113.89. We're technically, as we speak, right now, making a higher high. I don't know that anybody feels like today was the day that GDX made a new higher high. So we're actually at an all-time high as we record this. How about that for a surprise for people viewing this?
My system going into this had GDX day as neutral today, going in both short term and overall, because I was worried about the double top. So when we're refreshing the data a low tonight, I'm willing to bet this might flip back to bullish short term here. If this didn't double top, this, definitely a strong up leg move here.
One GDXJ, let's make a point here too. Same point, 152.24 is the prior peak. That was the one that just happened in January. Then the big crash down, respected the exponential moving average, like right down to it, held support, blasted back up. Today, as we record this on Thursday, the 26th, brand new high for GDXJ, which are not really juniors. They're more mid-tier producers and some of the bigger developers, and there's some even large producers in there. But it's still 60-some stocks, and they're making a new higher high today, Kevin.
And again, nobody talked about it today. Like CNBC was not focused on gold. I tuned in a couple times today, and nobody was talking any of the metal stuff today.
Yeah, so it doesn't feel like when this happened at 152, it felt like everybody was on this case and like people were celebrating it. I was at the Vancouver Resource Investor Conference and people were calling out numbers from the stage. Today, we're making a higher high, and it's like a quiet rally that no one's paying attention to. Even gold and silver investors that are resource stock investors may not be seeing that in their junior stock. So they feel like, oh, well, my portfolio isn't breaking out to a new high today. But these ETFs are, which to me is just a strong signal. Anyways, moving on to another metal of interest here. Let's talk uranium, nuclear power. I just have the uranium futures up. It actually got up to over 100 just recently in early January, which we hadn't seen in a while for the spot price. Now, what's important for the companies is term pricing, but it crashed back down right after that. So people thought, oh, that's extended. But then it's kind of held its own here. We're in the 80s basically. And if you think about uranium in the 80s, we spent years trying to get up into the 60s.
Yep.
And like if you back this up some, like there was a point in time like way back here where we were way, way down here. So this is in 2022. Look, we were in the 30s and 40s. I don't know if people realize where we came from. I remember 2017 and 2018 where we were down here close to 17. So if you think about this, and if we expand it back out here, look at the journey uranium has gone on over the last couple of years. Yeah, it's been volatile. So where it is today, hanging around the 80s, it's a nice medium price for uranium. Any thoughts there?
This is in our system. This is the third strongest setup behind for the metals behind platinum and copper. So this is definitely one I'm interested in and I'm watching. I own some uranium producers, and it's pulled back to medium level support, and it's still maintained bullish trend for both overall and short term, both URA and URM. So this is definitely something I think to keep an eye on, because I think this could be another, just like kind of like everything else that we're seeing that we've covered. Like I think this could be making another run, and hopefully it's not, blast through that double top and we're on to bigger and better things.
Now, URA is an interesting ETF that you brought up because it also has in it the nuclear stocks, so the small modular reactor stocks, and it also has in it some utilities like Constellation Energy and things like that. So it's a hodgepodge. It's not just uranium. It's nuclear manufacturers. And so you can dive into the ETF and find out what's it made of. But it popped up here in October. Then we rolled over in the critical minerals. We rolled over everything in October and November. Yep. And then we made another run in January like everything else. And then it rolled over again. It's not as resilient as like the gold or silver charts we just looked at. But it's not up as much, but it's been resilient, was what I want to say. And it's still held, for the most part, the 50-day EMA. I used the exponential moving average, but when it dove down, it hit the 144. And the reason I used the 144, a lot of people use the 200. I'll put a 200 down underneath that if it breaks this. But 144 syncs up pretty close to the 21-week moving average, but it's also a Fibonacci number. And Fibonacci numbers on charting are often used. And so because so you'll see it like, why are you using 144? That's why it's a fib number, but it's also almost neck and neck with the 21-week moving average, which a lot of people use. And I just like this one better because I can put it on the daily and look at it without using a weekly. So I think it's interesting that URA held there. And if we look at URNM, I didn't put the 144 day on there. I can do it real quick while we're doing it, do some live charting for you here. So all you would do is go to exponential moving averages, and you would just pick your time parameter, and I would put in 144. And I'll go ahead and put in the 200 day just so we can see what that support would look like too. This is just a good tool. So for those of you that are charting at home, these are the ones that are commonly used, the 200 day and the 50 day. So the 50 is in blue, the 200 is in green. I use this red one, and look where it actually came down to. If you look on there, it barely tested the 200 briefly, but just for a day there, it really was holding the 144. So just a little trick of the trade in between the 50 and the 200 day. Use the 144 day. So what do you think about using moving averages, Kevin?
I like looking for the crossover. So like if you look in between like the end of June, in between June and July there,
back
like that's an area, like that's a signal I would look for if I was going long and using these indicators. Like that's one of my favorite crossovers to use, is when you have a short term and a longer term, and then something that matches up to, I use the 144 too and the 200 just because the Fibonacci, and everybody uses the 200. But I think it's interesting how I think everybody's focused on the year-to-date performance of some of these metals, but I think, I'm not saying we're smarter than the rest, but I think if you're a good trader and you're disciplined, like I bought a lot of the stuff in October when it sold off, but it held those levels. So everybody's talking about on the news, oh, it's up, 30 or 40% year to date. Okay. But if you timed it right in October, you could be up 60, 80, 100%. Some of these copper companies, I'm up crazy amounts because it held support right where these charts would show. So I definitely am an advocate for using moving averages and trying to use the charts to to, find price discovery that people aren't paying attention to.
Yeah, we always talk about fundamentals tell you what to buy, but charts tell you when to buy. It doesn't mean you're going to be right every time, but you're stacking the probabilities in your favor. And there's some people that believe, oh, you can't use charts, they're just squiggly lines. But to your point, that crossover, so the blue line is the 50-day, it's the shortest time frame. When it comes up, it's below the longer term, which is bearish. That's why things were heading down. When it crossed right there in the summer, if you just use that one tool that you talked about, you would say, okay, well, this is time to go, long in this area here. Maybe there's an initial whipsaw where you lose a little bit here or there, but over the propensity of time, if you went long here, that's down here. Look at the spread between where you would have
Almost
gone
doubled
long
your
on
money.
this cross. Yeah. And the other thing is, when something like the 50-day breaks right here, you would think, okay, well, that's bearish short term. So you would say, well, the next place to buy is really down here at the 144. Well, if you bought here, you had a sprungboard back up, then it went back and tested. So if you reloaded again there, it sprung up again, then it came back and tested it. You literally could keep trading the 144, and you could have traded it 3 different times and sprung up as a short-term trader, or just accumulated a larger position in stocks in that little area. And then look what's happened since then. When it gets back above the 50-day, now it's bullish, maybe too bullish, because look how far away from it is. So then what does it do? It comes back and tests it, goes up, tests it again, goes up. Maybe it tests it again, so you could buy at the 50, and if it breaks it, buy it at the 144. But if it breaks higher, if you were still using this cross and you just bought here and just held, this whole adventure has been a long-term hold for you. So to your point, Kevin, there's ways to maximize gains by using charts. That's why we do this.
Yeah, and sell. Like I buy, a little bit at a time. Like I try to, I buy a quarter of what I want my position to be at some of these pullbacks. But then when you get up so far away from those, that's when you start chipping away and you lock in some profits. And that gives you some dry powder for those pullbacks, because there's always going to be an opportunity. You don't know where it's going to be. But if you don't trade right and you don't have dry powder, you're kind of stuck in what you have. And then now you're not a trader, you're a long-term, investor, and you could be a long-term bag holder, or you could be doing really well. But a lot of the time, if you don't take profits, eventually you're gonna have to sell something for a loss.
Well, and even if we go back and look at this chart, the GDX chart, it tends to respect over and over again the 50-day. So the reason I put the 50-day on there is it's spent very little time below it. The few times it has, it's been kind of like little false breakdowns, like here and here. But if you look at this is a year. So over 2025 and 2026, up through from March to March, basically, because we're right around the corner from March as we record this. Every time it's pulled back to the 50-day, it has gone back up. You literally could just keep buying at the 50-day. And even if you did it recently in February, as soon as this month,
Yep.
What did it do? It went up. So it's not foolproof. Could it break below it? Yeah, but then you buy at the 144-day. So that's just, instead of just showing you charts for the sake of showing you charts, that's how to use these things. If you're watching, that's how to use this as a tool. And
and you can keep it simple, right? Like this is simple trading. Like I see some people, they have a million indicators on their charts, and I'm like, right. I don't even know what I'm looking at here. Like you shouldn't have to work hard to justify a trade. Like if you can use 2 or 3 indicators and you get a clear signal, that's all you need.
Yeah, I mean, I'm not against Ichimoku clouds and Elliott wave and all the different things, but when people have a 13 count and a minor count and a major count, and they have this and they have the volume channels coming in on the side and all kinds of stuff, it's like, hey, look, when I look at this remix chart, which is basically your specialty metals, it may have some lithium in there, some rare earths, some tungsten, antimony. It's like it's a critical minerals basket, this remix. It says rare earths, but they have stuff in there that's not rare earths. Again, if you look at it, when it goes below the 50-day, it's a bearish pattern. So when it breaks here, okay, you could get out of the way and let it play through. But it's testing it here and here, but when it finally stabilizes on it and it's holding above it right here back in the summer, and then it's staying above it, that's a long-term trade where you just buy and hold. Now, where did it break down? Remember the October rollover, just like everything, it broke down through it. This is when people are saying, oh my God, the rare earth trade is over. Remember, China and the USA had shook hands and said, we're going to make a truce. It didn't matter because nothing has fundamentally changed. We still need all these specialty metals. So look what's happened. When it breaks back above the 50-day, it tests it, and it's way higher again. And a lot of people missed this whole rally because they got psyched out right here in November because they thought it was over. Now, what you would have done in that case is you'd have put the 144-day down there. Let's just do it live again and just show people what it looked like. Here's the 144 exponential moving average. 144. It didn't even get down to it. So I wouldn't have bought on that pullback unless it got down here. And I wrote that on my Substack article on Excelsior Prosperity. I said, hey, if it gets down to the 144-day, then I'll buy again. But right now I'm holding what I got, and I was buying right here just because I thought it might be a fake out. It was. Look what's happened though again in February. It came down from this big peak. What did it do? It tested the 50-day exponential and then it rallied again. And now we're at 144 versus 102. We're in the exact same position that silver's in with the with the SIL. Like, is it going to
It,
double top or not? So when we look at this, it's like, is it going to double top or not with Remix? Any thoughts on rare earths or these specialty metals?
I read an article the other day. I forget what publication it was in, but it said entering 2025, it was like 95% dependent on overseas suppliers for rare earths. And you would think with all the trade and all the tariffs and the domestic supply program and the DoD, the different funds they've set up, we're actually more dependent now. It's up to 99% dependent.
How much China controls the world's critical minerals? I actually had this up, so this wasn't planned or rehearsed. I just literally had this up before we got on here. Here you go, folks. Here's how much China controls, and this was, I believe, October 2025, so it's only a couple months old here. Gallium, magnesium, tungsten, graphite, silicon, cobalt, platinum that we just talked about, India, rare earth, 69%, nickel. So, and some of these are household things. We just talked about palladium. There's so many on here. What's interesting to me is that even platinum is more controlled than you would think by overseas trading. So yeah, when you look at a critical minerals chart like this, it's just so important to understand not just the thematics, the fundamentals, but also what is the price action doing. And the price action isn't saying that everything got fixed right here. The price action is saying we're still in an issue, and this thing the price has to respond higher.
And I think it shows how long a lag time there is to not only permit this stuff, but build the infrastructure and get it out of the ground. Like this isn't you slap a tariff on something and we have more of whatever rare earth we need within a month. Like this is a long process, like copper mine, 10, 20 years to get, once you find it, to get in production. Like rare earths take a while. Like this is not an overnight fix. This is a long-term issue.
Rare earth 70% basically, and that's also the processing. It takes a long time to build rare earth processing. So tying in with the energy theme, one other stock that I think we should bring to people's attention is oil producers. I've got XLE up. I'd be curious what your system shows, but my thoughts are initially, yeah, it's been kind of respecting the 50-day exponential. It's tended to dip below it and then come back up, dip below it, then come back to dip below it. But this latest run is different. It's a different character. Again, this is just this year. Here's where 2026 started, right here. Look what's happened this year. It tested it right here, and then boom. What do you make of this oil producers chart, XLE, the big spider ETF? Why is it so strong? What do you see on your site?
It's getting really stretched. My site's showing the same thing. It's actually neutral across the board now, which I'm worried it's going to roll back over, and it has literally no medium or heavy support until 44.86. So that's even below that 50-day line. Like we have a confluence of 28, which is heavy support, but there's nothing between 55 now and that. So that's a
what was that
dangerous
number
setup
again?
in my opinion.
What was that number again?
44.86.
So yeah, that's way down here.
Throw your 144 on. I'm curious if it shows.
Let's try it, and let's try the 200 days. Let's see what they both stack up. So we'll do exponential 144. Okay, and then exponential 200. And these are just great tools for anybody to use. The 200 is the one institutions use. So the 200 comes in at 45.83. That's pretty close to the number you gave.
Yep.
And if you notice, it tends to break below, even because the green line is the 200. Even this time and this time, it broke below it. So a dip below 45 down to 44 wouldn't be that surprising based on the history of breaking it and breaking it. So that's a big fall from grace the oil stocks that have. And if that happened, I'd be buying with both hands. I've already been adding some oil stocks that are not that are fundamental cases. Maybe we can get into those some other time. But when I look at most oil stocks, they're pretty pricey. We just interviewed Rick Rule, if people know who that is, on our show last week, and he said he loved Exxon at 100, but he's not in love with it at 160, and he's on strike as a buyer because it's moved up. He said the oil stocks have outperformed his expectations, and when I look at this ETF of big producers, I would say that it's unusually strong considering oil has been, during this time frame, in the 50s and the low 60s. I don't know that the low 60s are where to celebrate, but if oil went to 70, 75, 80, I don't know what XLE is going to do, but you said it could roll over. here's another point we can make with these other indicators. The RSI, the real strength index, relative strength index, it kind of got toppy here, and it looks like it could be rolling over. The CCI, the commodity channel index, it seemed like it got a little toppy here. And again, this is like right in this area. And now it looks like it's rolling over. And then the TSI, the true strength index, it crossed. You use the crosses on here as indicators. It crossed right here as a bullish cross. It just made kind of a bearish cross. So the question I have is, do these things roll over from here? Could that be a buying opportunity for people that missed it? Any other thoughts on the oil stocks?
MACD just rolled over negative cross on the 24th. So I'm curious. I could see this going XLE. I could see this pulling back.
There's the MACD right here. So
yep.
Yeah, it just crossed. So again, just for people to use it as a tool, when it crosses this way, when the black line comes up to the red, that's bullish. When it crosses the other way, it's bearish. Well, there's the bullish. Are we getting set up for a bearish cross? Now, they can keep crisscrossing back and forth. Like you can see at periods of time here where it wove back and forth. It's called getting embedded. So that can happen. We could maybe get embedded here and then even run higher if oil just blasts higher because of an Iran situation. Like if Iran situation spikes oil to 70 or 75, and maybe that happens before people even watch this. I don't know what's going to happen in the next week. Then this could just be an embedded reading. And same with these, they could quickly reverse right back up to oversold. But it's one where you want to watch it more vigilantly.
Yeah, I wouldn't be chasing it here. I would be patient just to see, like, too much geopolitical uncertainty. The chart's way too stretched. Like I think the other opportunities we talked about earlier are a better setup, at least in the short term, in my opinion.
Well, I think that's it for me on this one. I just want to end it again with gold making a new all-time weekly high, as long as it doesn't fall out of bed tomorrow, which sometimes these Fridays have wild moves, as of Thursday. But we can also say that we just had the highest weekly close the last 2 weeks. So the last 3 weeks in a row, gold has made a new higher weekly, and it's like nobody noticed. So just something to think about.
Yeah, this is definitely an interesting chart, and I think there's some opportunities ahead, and we just kind of got to see what happens with the Iran situation in the short term. Like the tariff thing there was uncertainty with that. Everybody's kind of waiting for the Supreme Court decision. Now we have that kind of off the table, at least for now. I know they're looking at other alternatives. I'm not a tariff expert, so I don't know how exactly it's going to go, but I think kind of my main thing I'm watching right now is just what's going to go on with these peace talks with Iran, because I think that could really, throw a loop in some of these charts in the short term.
Well, and keep in mind, gold and oil are all global markets. And so there's more going on than just what happens in the U.S., what happens with Iran. There's still central bank buying. Let's also remember that the Chinese were gone for Chinese New Year celebrations for 2 weeks, and now they're back. I think that that's not a surprise that gold is making new highs on the first week they're back trading again. So it's a global trade out there. There's a lot of factors. It's hard to pinpoint it to just one thing. But what you can say when you look at a chart like this of gold is it's pretty dang strong. And I think that's a great way to use it as a barometer for the fear trade and the monetary trade. So,
yep. Do you want to tell people where to find you?
Yeah, you can find us at the KE report. I didn't really have stuff perfectly timed here, but I'll just show you the landing page here for today. We basically do interviews with different companies and with different speakers. So Dana Lyons, a generalist today. Stillwater Critical Minerals is a critical minerals company. But we have a bunch of different interviews. There's the Rick Rule one if you want to catch it. We have things on there about just the metals, about the markets, and we have a lot of things you can navigate through. And then you can also come see me at Excelsior Prosperity. Give me 1 second to get it up for you here on the site. But I write about, this was an article that I'm scanning through on silver producers that I just wrote not too long ago. But if you come to my Substack, Excelsior Prosperity, you'll see a bunch of articles here on the precious metals, the commodities, really everything we talked about with charts, with graphics, a little bit of humor, and hopefully a little information. So I hope that gives you guys some insights.
Yeah, definitely check it out. I look forward to, you usually release it Saturday or Sunday, and that's one of my favorite weekend reads. So I definitely encourage people to check it out. And thanks for joining us again.
Great to be here, Kevin. Let's do it again in a month or so.
Sounds good.